So recently we had some great news pertinent to Tesla stock that just took place over the weekend that we absolutely have to talk about, especially since we're seeing Tesla stock pretty much start off for the trading session on a positive note. Now, over the weekend, we had this tweet from Surya Merit stating that Tesla has launched a brand new long-range rear-wheel drive Model Y variant in the United States for just $44,990, which is only $37,490 when you include EV tax credits, with a range of 320 miles, discontinuing the previous Model Y rear-wheel drive for 260 miles. So essentially, we're having a better Model Y rollout, but it's priced at almost the same area of the previous discontinued Model Y, but it also gets a bit better because we had this tweet from Elon Musk himself state how the old 260 mile range Model Y built over the past several months actually have more range that could be unlocked for just $1,500 to $2,000. And he goes on to state that this is honestly something that could be updated by just a software update by just paying that price. And so essentially, again, we're having a better Model Y rollout with more range for just a small, price of $1,500 to $2,000. But in addition to the good news that we heard from Tesla stock, I also want to go ahead and highlight one of the things I talked about in last night's briefing for those within the Push and Profit private group, and how this was honestly a very slow week, and there's one thing in particular that we wanted to monitor, and that is the 10-year Treasury yield. Now, in last night's briefing, I stated how pretty much we have a easy, simple week in terms of economic data. There's not really much going on. And so we're not going to have the market have a huge influence based on economic data, as there's nothing major taking place. And then on top of that, we already had a lot of the earnings from the S&P 500 already be announced. And so the main driver for the markets was again going to be the 10-year Treasury yield, and how that was something that we were going to want to watch. And in fact, last night I shared how the idea was that the 10-year Treasury yield was likely to gradually fall down, and that was going to be a plus for the broader markets. Now, this morning at 9:03 a.m., I shared with the Push and Profit private group how, as we talked about in last night's briefing, this is a slow week with economic data, and the main focus is that 10-year Treasury yield. And what we're seeing is exactly what we talked about. The 10-year Treasury yield is slightly down, and the S&P 500 is doing well already per the pre-markets, but we're also seeing it do well even after the pre-markets. So with that said, I want to go ahead and touch a bit further in regards to Tesla stock from a fundamental perspective, but also from a technical perspective as well, and kind of just use those two in confluence to kind of just highlight what we're currently seeing in regards to Tesla stock. As you guys know, if you guys are familiar with the channel, I don't like to just look at one data point. I like to use multiple data points together and kind of synthesize it to kind of get a better picture of what's going on. And so I want to go ahead and hop into my laptop, but just a friendly reminder, if you have not done so already, make sure to tap that like button if you're finding any value in today's video, and also hit that subscribe button so that you don't miss out on any future videos as well. And with that said, let's go ahead and hop into my laptop. Alrighty, so we are officially in my laptop taking a look at Tesla, and as I promised, I want to go ahead and touch on it a bit further from a fundamental perspective and a technical perspective as well. And so I want to start off by highlighting this chart right over here that I shared for those recently within the Push and Profit private group. Now, for those of you guys that are unaware, essentially the Push and Profit private group is a private group where every single day the markets are open. I hold a daily briefing kind of touching on what's going on in the broader markets and what are some things that we are monitoring, as well as sharing some trade ideas. And again, that's going to be the second link in the description below if you guys are interested in joining. There is a coupon code that does expire this week, but moving forward, I want to go ahead and expand on why I'm showing you guys this chart right over here. So it shows how Tesla, and this, by the way, this is from Bloomberg, it shows how Tesla's valuation is an outlier in big tech. And so when we look at Tesla in comparison to its constituents in a lot of the mega cap names, we see that it's pretty much in regards to its forward 12-month PE ratio, it is priced phenomenally much higher than Apple, Amazon, Microsoft, Alphabet or Google, Nvidia, and Meta, right? And so why is this important to understand? Well, one of the things I highlighted recently, and I'm going to go ahead and scroll up a bit, is mention how right now Tesla is fundamentally overvalued in terms of its forward, price to earnings ratio, but it also sits at a high volume suggesting consolidation, which is likely for some time. And if you guys are unaware of what I mean, I'm stating how Tesla right now, although it is priced at this area where it's, overvalued from a fundamental perspective in comparison to a lot of its peers, it's at this area where there's a lot of volume relative to price, meaning that there's a lot of exchange between the buyers and sellers. And so we're most likely going to see a lot of consolidation take place, meaning we're not going to see any big moves up or any big moves down just yet. We're probably going to be bouncing up and down for a while until we break out of this volume shelf. Well, why does that matter? Well, let's go ahead and toggle back. And I said how this is probably best for now, as the price going up for Tesla would skew it further from the fundamentals, and that's not something that we want. Yes, I do have exposure to Tesla in my long-term portfolio, and I do want Tesla to go up. I mean, any long-term investor who has, exposure to a company would want the company to go up, of course. But I don't want the company to go up and get skewed from its fundamentals, as that is just posing a risk of Tesla entering into a frothy territory, meaning it's overextended, and that means it's subjected to fall. And that's why back in December 28th, I made a video stating how Tesla was overvalued from a technical perspective and a fundamental perspective. And although I was deemed as the crazy guy, we ended up seeing Tesla fall down quite a bit. And that's why I was buying a lot of other names that were doing well. For example, I bought a lot of NVIDIA before it actually broke out. And we saw that NVIDIA just went wild, right? And so I know I was called crazy for saying that Tesla stock was overvalued, but that's essentially where we were. We were extremely overvalued. And now what I'm saying is that if we're looking at the 12-month forward PE ratios, Tesla is still overextended. But the good thing is we're at this area where there's a lot of consolidation. And so what I'm hoping for, and I hope I'm not losing anyone. I know sometimes when we kind of touch on, mixing in technicals and fundamentals, people get a bit lost. But what I'm trying to say is that, yes, I want Tesla stock to go up, but it's kind of good that we're in this area to consolidate, because it gives Tesla time to breathe, and hopefully the expected earnings per share going forward start to increase. And so fundamentally, when Tesla starts, the price starts going up, it wouldn't be fundamentally skewed, right? And so I went on to clarify. I said, so to be clear, what I'm saying is that Tesla moving sideways gives it time for forecasted earnings to hopefully increase over time, so that when the price does go up, it's not fundamentally overvalued. Because if the price does go up while forecasted earnings aren't, then I would put Tesla in further frothy territories. And so that's what I'm kind of saying. And so essentially, it's not a bad thing that we're consolidating. Again, this may be good to kind of give some time. We know that in August we had the unveil robo-taxis, and perhaps we may have some other surprises from Elon Musk or the Tesla team as well. And so that could hopefully raise the forward PE ratios. And then by the time Tesla does go up, we'll have this volume gap where there's little volume relative to price, and it could spike up. And at this time, when it does spike up in the future, it won't be fundamentally overvalued. And so again, I know that sounds off for someone to say, especially if you're long-term bullish on Tesla, but I don't want to hold names that are overextended. I know people want just things to go up, but at the end of the day, you expose yourself to risk if something's up for no apparent reason. That's like a lot of those EV companies, those other EV companies. Like, let's take a look at NIO, right? So let's take a look at NIO. And remember when NIO was up in 2021 at these extreme heights? It was extremely overvalued from a fundamental perspective, and that was risky, especially if you were buying at these areas, as we ended up seeing a capitulation of NIO, and we ended up seeing this with a lot of the EV stocks. And so that's kind of what I'm highlighting in regards to Tesla. Those are the things I'm watching, and if we take a look, yes, we did have pretty much Tesla's spike up after the good news from over the weekend. But as we see, Tesla's kind of falling right back down. And again, that's further kind of providing this example of this narrative that I said that Tesla was most likely to consolidate, move sideways. Of course, if something moves up and it moves down, well, at the end of the day, it's not really moving in either direction. It's just moving sideways. And so that's expected, especially when there's a lot of volume relative to price over here. It's expected. There's a lot of buying and selling, so naturally we will see that consolidation. And so that's why I like to pay attention to the technicals. I know a lot of people only look at the technicals, and I think that's a bad idea. You have to also look at the fundamentals and also the macroeconomic environment. And what I highlighted was that this week we don't have any significant data coming out. Now, next week, yes, of course, we're going to have inflationary gauges such as the PPI, the Producer Price Index, and the CPI, the Consumer Price Index, and that's going to, be a significant driver of the markets. But right now, we already went through earnings season. There's no more mega cap names that are going to be driving the broader markets. We don't have a lot of news. And so right now, it's only natural for Tesla to move sideways. Now, the broader markets, the SPY, that's a different story. And that's why I talked about last night that we were likely to see the markets continue going up. And again, if you guys are interested in joining the Push and Profit private group, it's going to be the second link in the description down below with that coupon code. So make sure to join. And also, if you haven't done so already, just a friendly reminder to subscribe to the channel. Hopefully you guys got some value in today's video, and I look forward to seeing you guys on the next one. Take care, guys.